So this week I just started a new trading account with 10,100 Singapore dollars in Interactive Brokers. Why? Because when I first opened the account I used $100 and then I added $10,000 later. And then I transferred all of the Singapore dollars to Interactive Brokers. Then I converted all my Singapore dollars to USD, which leaves me with a negative $2 value. And I tried to transfer back 2 Sing dollars, which had a $4 fee, which leaves me with negative $4 in value. Wapiang oi. I want to... So I can get rid of the negative $4 value. That being said, in my first week of trading options or selling options, my returns for this portfolio is 5%. So I had a very terrible start to the week. On Monday, I was down almost 1,500 Singapore dollars. And by Tuesday, Wednesday, Thursday, I managed to claw them all back into my account. So right now it's Friday, the market is gonna and I'm gonna have some options expiring. It looks as though most of them will expire worthless, which means I get to keep all of the premiums. And that is a good 6-7% of $10,000, which is $500 to $700 this week. First week of trading. Hey, what's up friends? My name is Gerald and I'm all about personal finance, investing in stocks, options and cryptos. And if you're new to the channel, do consider subscribing if my video is good. So if the performance I mentioned earlier kind of appealed to you, I just want to give you a piece of advice, right? Or warning. Don't get attracted by these extremely large numbers, because options itself are kind of leveraged. So you can see 1 week I can earn like 500-600, 5%, 10% of my portfolio even, and over weeks you can stack up to a huge amount. But at the same time, losses are equally or if not larger in options. So I'm going to assume you have some basic knowledge in option. If you don't have any basic knowledge in options, I suggest check out the beginner option masterclass. I think some guy posted a 4-hour video course on understanding options. It's a really good video, and if not, watch a lot of Tasty Trades video on his channel and you learn a lot about how options work. I want to publish a huge amount of option guides for you all, but it's going to take me a long time to cover the breadth and depth of the option knowledge that's already available out in this YouTube universe. So let's talk about my options portfolio, right? So I started trading options very aggressively in February this year, and comparing my performance to the S&P 500, because that's the market, right? My performance is about double. So I returned about 30-ish% compared to the market. But that is excluding meme stock, because I traded options on meme stocks and they were terrible, even though volatility was through the roof. Including meme stock, I actually underperformed the market by a factor of 15%. So basically I lost 30% of my portfolio from meme stocks alone. That's how bad it is. So I'm just going to be transparent about my portfolio, and the reason being is that I want to kind of start this new monthly series where I discipline myself and really trade options proper and grow my portfolio. So let's talk about how I even started trading options aggressively, right? So I started, I think, in 2016, where I attended value investing options course in Singapore. So it was by Rashvin, this Indian gentleman. So he taught value investing and then he taught options on top of it to earn like extra income. And what happened was that led me to lose a lot of money, because I didn't understand the nuances of options, especially what happens when they started to merge. So there's a lot of problems and intricacies of options that you really need to understand before you even dwell right into it. So it took me a couple of years to really learn the little nitty-gritty details of options and have a lot more confidence to trade options more aggressively. It's only the start of this year where I came across a couple of more in-depth research papers talking about trading vertical spreads as a profitable option strategy. And more importantly, it's more profitable than just buying and holding the index. So basically, I did a lot of research. I read, and then I started to backtest and practice this strategy throughout the COVID period. And true enough, this strategy outperformed the market throughout the COVID period. And true enough, if I avoided meme stocks, because no one talked about meme stocks, right? It wasn't a thing last year. So minus meme stocks, actually my portfolio did perform twice as compared to the market, which is a good thing, and it doesn't take a lot of time to manage my option position, which is why I'm really happy to start to really track my performance in a more public manner and be more transparent to you of my portfolio, right? I think not a lot of people are very transparent of their current portfolio, but I want to try to be transparent with you. So if I make money from my options trade, learn from me. And if I make mistakes, and if you know better, teach me, connect with me. I'm going to create a Telegram group chat so that I can learn and grow together with you. So if you want to stay updated, hit the subscribe button. Another question is, how often should I post updates on my portfolio? I just want to throw it out to you because I really don't know how often I should post updates. Should I post them weekly? Sounds overwhelming, or maybe monthly. I can talk about a quick recap of my portfolio, of my option strategy, right, or my thoughts behind it. So now let's talk very briefly about my option strategy. So the way I work is that I mostly deal with vertical spreads, right? So either the sell put vertical spreads or sell put call spread. So this forms essentially an iron condor. And for those of you that are brand new, let me try to speak of it in a very simplified manner. Basically, what I'm trying to act as is like an insurance agent and the lottery ticket house. So I sell people insurance and I sell people lottery tickets, and when people wanna gamble, they pay me a premium which I collect on a monthly basis or weekly basis, and those premium will become all in my pocket and I'm worthless if bad things do not happen. And if things become very bad, lottery, they pay a huge amount of money to cover the other person. So I collect small premium, but I cover a huge amount of money. So the strategy here is really to collect premiums every single week and use that as kind of like a recurring income to make money. And to understand one step further, why does this work, right, is because by selling options, the advantage I have compared to the buyer is that, number one, time is my friend. So as options go closer to the expiry, the premium that they pay becomes worthless. So maybe at the start of a month, I buy an option for 1 month later, it's $1 worth of premiums. Towards the end, it could be worth almost zero. So that's the premiums becoming lesser over time. The extrinsic value of the premiums becoming worthless over time. Second reason as to why this works is because options are priced. So you need to understand how options are priced, right? So one of the very big factors to how options are priced is number one, time. Number two, volatility. So the more volatile the market is, the more premium someone has to pay for insurance. It makes sense, right? Because it's riskier. That being said, if you read the charts and you're like a nerd, the historical volatility is always lower than the implied volatility from the price. What this means to say is that on average, options are overpriced, meaning to say that the buyers are overpaying and the sellers are overcharging. And that is why, statistically speaking, our option sellers have a slight advantage, all else being equal, because there is an added volatility priced into the contract. I know this sounds technical, but I'm trying to really explain as clearly as I can why this strategy has an edge over a lot of other trading strategies, and it's simple, really, just sell options. And what I'm trying to sell is mostly strong companies and indexes. So I'm very heavy on indexes. Why? Because indexes don't go to zero, right? Over the long term, Warren Buffett has publicly stated that if you don't know where to put your money, just keep buying the indexes, because over the long term, the index or the US S&P 500 is going to do very well. And if it's going to do very well, why not sell options betting that you'll do very well? Turns out he was right. So that's really the bulk of the strategy. And then of course, buying companies that have a strong moat around their business, such as Starbucks, Warren Buffett's Berkshire Hathaway. Makes sense to sell options on his company as well. This is some of the companies that I have in my watch list. And then let's talk very briefly about mindset and maybe some of the tactical nuances, right? So the first is that I think the goal is really to learn my technical analysis well, where are the support and resistance, and more importantly, how to really set up good trades. Because when it comes to option selling, right, even though a lot of people in Singapore classify it as like option investing, right, the truth is that is as dangerous as it can be, because when you are trading, you need to have a mindset of a trader and not as an investor. So that was one of the biggest mistakes I made, and that cost me a lot of money. So just want to share with you guys, I'm very focused in having this trader mentality of how I can enter my positions very well. That's more than half the battle won. That's one. And of course, managing my portfolio sizing like a trader. So in terms of options, I'm positioning less than 5% into each position. Ideally, try to bring it up to 3% as my portfolio grows bigger so that I can minimize risk in each position. I'm going to trade on a lot of days, and by selling iron condor, I'm never at risk of a black swan event because I always have one side of the strategy that always makes money. And by selling iron condor, it's up and down, right? So I will never risk losing all my money basically. And if I lose money, like I have a very bad week, instead of doubling down to try to earn back last week's losses, what I'm trying to do is the reverse, which is to reduce my trade sizes significantly and slowly build my confidence back up, and again focus on number one, entering into very good trading positions. And that's why the main priority is capital preservation through understanding statistics and probabilities, and really focusing on week to week solid trading entries. So when it comes to profit expectations, this is expected to significantly outperform the indexing strategy. You just buy the index. There are a lot of people that have done very well. I'm not sure how they do so well. They have returns as high as 200 to 400% in 1 year, but I believe they're probably taking up a lot of margin. For me, I don't want to take a lot of margin because it's very risky, very dangerous. So I am expecting returns of approximately 20 to 50% a year. I left a huge gap because I really don't know how the market will perform and how good I am as a trader, right? So that's really this to summarize my portfolio. Let me know what you think, how often I should publish a video like this, and more importantly, subscribe to my channel so that you can learn from me this trading strategies if I do well, and you can teach me and learn from my failures if I actually mess up really badly. So that's this video. It's a very casual one. I hope you enjoyed it, and connect with me through Telegram, and I'll see you next week. Check out my other videos here, and take care and stay safe. Take care, everyone.